So, Bryn Talkington of Requisite Capital, you heard what Mike said about the NASDAQ and the premium to where it's trading ahead of the S&P, which was really a stunning stat. Implication being this can't last for much longer, can it?
Yeah, I agree with Mike. So tech stocks are acting like we're going into a soft landing. Energy and bonds are acting like we're going into a recession, and regional banks are acting like we're going into a depression. And so I think that energy is very oversold, and tech stocks are very overbought. And I think you have this like algorithmic trading, this big rotation out of energy specifically into tech. And so I think it's overdone on both sides.
Overbought can get more overbought, though, in tech if they're deemed to be. And the idea we posed at the top of the show as to whether these stocks are back as defensive plays. Now, our Twitter poll suggested that, at least the sample of the viewers who voted suggest it's not.
Yeah, well, I think multiples matter, though. And so I don't think that, I own Apple, the Qs, Microsoft, Roblox, Tesla, PayPal. So I think it's great these companies are going higher. But do I think Microsoft's going to touch 300 anytime soon? No. I just think that multiples do matter. The NASDAQ has still done about 17% per year for the last 10 years. It's just over-earned. And so I think this is more about positioning and trading versus investors trying to extrapolate some longer-term trend. So I'd be careful here adding to new positions in technology.
Would you be careful adding to energy, which has been a surprising loser, to say the least?
Yeah, no, I should have taken Steve's Devon yesterday when he sold it. I actually added to my energy names this morning. I added to XOP, I added to BHP, which is a diversified commodity play. And then I also added another ETF RYE, which is like 25 different energy names. I think I'm going to trade around those. But I think that the narrative shifted too quickly if we're going into some hard recession, when I think that the Fed is going to be able to fix the plumbing. And if they fix the plumbing and they put this program together, I think that we are going to be able to separate the two. I just think markets are very skittish right now. And so they're using energy as a source of funds to buy technology.
Not only that, they're buying gold, too, right, as part of the commodity complex. What do you make of that?
Well, so when you really trade commodities, most people stay within that commodity complex. And as you're seeing rates are coming down, that gives you a bid to gold. But I think the trade has somewhat started to play out. If we do get the Fed to say we're going to pause, I actually think the Fed's going to pause quantitative tightening. I think they're going to stop increasing the balance sheet because they already are doing QE with this new facility. And I think that's another narrative where gold can have a bid if the balance sheet is not getting reduced and if those the financial tightening is looking to ease from the Fed. That helps that gold narrative as an ultimate flight to quality.
Bryn, thank you. Bryn Talkington of Requisite.